really important thing is crypto right now is $2.7 trillion industry. It'll probably finish this cycle at $10 to $15 trillion. And by 2030 or so, it'll be $100 trillion, right? This is the largest, fastest accumulation of wealth in all human history. It's as simple as that. That's what that chart tells you. Now, what everybody does, and Howard, you explained, there is a bell curve. And you want to be on the left of the bell curve, which is actually the same as being the Jedi Master on the right of the bell curve. Everybody in the middle who overthinks it, it's simple. Number go up. That's the whole crypto thematic that you need to know. You can either do all the deep dive, and I must have done 10,000 hours on this, and I might be at the right side of the curve sometimes, but I don't mind being the left either. Just don't overthink it. The moment you overthink it, that's when you get yourself into trouble and you start not seeing it for what it is. You see it for what you want it to be. Numbers going to keep going up. The adoption's going to keep going up. Mm-hmm. You don't need to know anything else. That's why it's so easy.
Raoul Pal, a macro analyst known for his insightful opinions on macroeconomic trends, recently shared his thoughts on the potential growth trajectory of the cryptocurrency market. Paul's analysis, which he calls the Everything Code, explores how the global liquidity cycle since 2008 has influenced macroeconomic trends and propelled growth assets, including tech stocks and cryptocurrencies, to higher levels, new heights. At the heart of Paul's argument is the idea that the depreciation of fiat currency driven by increased liquidity needed to meet debt obligations acts as a catalyst for rising asset prices. He suggests that this phenomenon, coupled with the rapid adoption of cryptocurrencies comparable to the exponential growth of the internet, could pave the way for a significant increase in the market capitalization of cryptocurrencies. Paul predicts meteoric growth from $2.5 trillion to $100 trillion, buoyed by the Metcalfe Act and fueled by unprecedented levels of adoption. Chris Bernisk, former head of cryptocurrencies at ARK Invest, agrees with Paul's optimistic outlook. He said the cryptocurrency market could see significant growth, reaching $10 trillion in the short term and skyrocketing to $100 trillion in the future. Paul enthusiastically agreed with Bernisk's view, noting that there is consensus among some sectors of the financial community. What's really important is that cryptocurrencies are currently a $2.7 trillion industry. It will likely end this cycle with between 10 and 15 trillion, and by around 2030, it will reach $100 trillion. This is the fastest accumulation of wealth in human history. According to Raoul Pal, this might be your last chance to buy Solana below $200. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana.
Right. If I'm right that this is the fastest, largest accumulation of wealth in all human history, right? If it goes to 100 trillion, to JC's point, this is the S&P is worth $50 trillion, or the US stock market, entire US stock. It's 100 years of accumulated value, and we're going to double that in a decade. It's like, this is la la land, right? The amount of money that's going to get made here is la la land. So what do they do with the money? I was speaking to a very famous hedge fund manager yesterday, and he asked his son this, and this guy's deep crypto. And his son is too. And his son's like 25, 26. He said, what are you going to do when you make your millions? He's like, well, I'll keep it in crypto. He's like, but when you take any money out, what will you do? He said, I'll buy property. And his dad was like, well, do you want to buy a super yacht or anything like that? He goes, no, it's a waste of money. So I'll buy property because it's an asset, and I will buy NFTs. If you think of Ethereum as Android, you'll think of Solana as Apple. It's a closed economy. And it also, because it's not built on the Ethereum virtual machine, which is a much larger network. So what you've got here is a whole different operating system. Like, I use Apple, other people use Android, fine. Or PCs versus Macs. But what it also happens to be is very fast and cheap. So it means it's very useful for this kind of stuff, like meme coins or things that require velocity. Could that be tickets in the future, to train tickets, an event ticket? Could it be anything? Yes. So I just think of it as a very efficient technology that's about to get more efficient with the Fire Dancer upgrade. But it doesn't mean it replaces one or the other. It's just earlier in its adoption curve, so it's going up a lot as it's finding its place within this new global infrastructure of blockchain technology. And it's proving itself to be now a very important player. So I just sleep at night knowing that if there's going to be a retail chain, it's probably Solana because of its attributes.
Historically, cryptocurrencies have shown low correlations with traditional asset classes, providing a unique source of idiosyncratic risk in portfolios. Bitcoin is known for its extreme volatility with huge price swings like a roller coaster, falling more than 64% in 2022 and then rising 160% in 2023. This volatility can be a challenge for cryptocurrency traders. In contrast, the S&P 500 offers a more stable performance with average annual returns of 9 to 10% and serves as a benchmark for the U.S. economy. Despite lower returns than Bitcoin, the consistency and reliability of the S&P 500 make it the preferred choice for risk-averse investors seeking predictable investment results. Allocations to cryptocurrencies can diversify risks and improve returns on traditional portfolios. During the first quarter of 2024, the total market capitalization of cryptocurrencies, including Bitcoin, Ethereum, altcoins, and stablecoins, increased by 63%, driven by gains in major cryptocurrencies such as Bitcoin and Ethereum, as well as rising stablecoin emissions. Bitcoin had an impressive first quarter in 2024, returning 69% and outperforming most traditional asset classes. According to the joint report from Coinbase and Glassnode, despite the launch of Bitcoin ETFs, which many believed would result in a stronger correlation with traditional financial assets, Bitcoin has shown minimal correlation with major asset classes. Bitcoin has a negative correlation with the DXY index and gold, while its correlation with the S&P 500 was low at 0.11. This suggests that Bitcoin's price movements are largely independent of traditional markets. Solana is emerging as the Apple of cryptocurrencies, innovating with a focus on leveraging hardware to improve the Web3 experience. However, Solana's appeal goes beyond just being an Apple imitation. Unlike Apple's hardware-centric approach, Solana flips the equation and focuses on leveraging hardware to improve and extend the Web3 experience. It highlights the ambition to innovate through software, introducing new features and experiences instead of just facilitating the sale of hardware. This analogy, while likely to show Solana's commitment to performance and user experience, UX, only scratches the surface. The true essence of Solana lies in its network performance, powered by multiple threads for parallel processing. This technical prowess attracted pragmatic developers eager to explore Solana's potential during the DeFi and NFT boom. Its ability to offer fast transactions at low fees quickly positioned it as a competitor to Ethereum. The commitment of those who shared Solana's vision did not waver. Indeed, the focus on strengthening network stability and resolving technical challenges has helped build community trust. Community and ecosystem development are at the heart of Solana's philosophy. Initiatives such as Bonk, Memecoin, Airdrop have galvanized the Solana community by allocating 5% of its total supply to developers. This distribution unified the community and sparked significant growth within the ecosystem as developers participated in rebuilding efforts. Amazingly, the Memecoin's value increased by 20,400% from its lowest point, creating a positive feedback loop that renewed interest in Solana. This gathering led to the distribution of 30 million Bonk tokens to Saga mobile users. This further amplified interest in Bonk and Solana. So consider this a very effective technology. This is about to become more effective with the Fire Dancer update. But that doesn't mean it replaces one or the other. It's just that at an early stage in its adoption curve, it's accelerating a lot as it finds its place within this new global infrastructure of blockchain technology. And now, he's proving to be a very important player. According to some analysts, 80% of Bitcoin holders don't sell, and the same goes for Ethereum with staking and everything else. The real offer is therefore 20%, plus miners. Miners continue to halve every 4 years. Then you have no supply, so this represents 20% of both. 2.7 trillion is actually available for purchase. You bring in something like an ETF, and things get crazy. The more people adopt it, the more the price increases.